What's up everyone, it's Karthik with MoneyVest. So one of the best months for the S&P 500 in 2024 with the S&P 500 up almost 6% in November. I knew it. It was my birthday month. I knew the markets were going to be very, very strong, and we have been crushing it with the options portfolio hitting a new all-time high, the Dow Jones hitting a new all-time high, and the MoneyVest index now almost back up to 4 in the greed territory once again. So this right here was a short Thanksgiving week. We had yesterday the markets closed. Today markets closed early. So of course this update is going to be coming out earlier because the markets closed at 1 p.m. Eastern with a lot of money flowing back into the likes of Tesla, Nvidia, and of course Magnificent 7. Hope you all had a fantastic time during your Thanksgiving dinners with your families and with your loved ones. I hope that everyone continues to do really well in the markets. And of course, today is indeed Black Friday. So take advantage of all those beautiful sales and the deals that we have going on. So Dow Jones up over 42 basis points. We had the S&P 500 up over 0.5% and the NASDAQ here up over 83 basis points, just shy of 19,220 right now. And this right here was the portfolio. The long-term portfolio was just up shy of $10,000 on the day. And of course, we had a lot of sectors, including discretionaries, leading the way up a little bit over 1% thanks to Tesla, which was up almost 4% on the day here. The bonds also recovering a little bit as the yields come down. XLK, which is of course primarily technology. We had QQQ, SPY up over 87 and 61 basis points respectively. Industrials, communication services, staples, materials, energy, healthcare. Everything was pushing higher except for real estate, which was slightly down about 0.5% on the day here. And of course, this was the Magnificent 7 with Tesla leading the way back up to over $345, up almost 4% with Nvidia coming in at a second here, up over 2%. Amazon, Apple, Netflix, Meta, everything was pushing up except for Google, which continues to be a little bit more weak after the DOJ investigation, the potential for breakup within the company. It has been a little bit more sideways. And of course, Microsoft has also been one of the underperformers in 2024. But nonetheless, a lot of money flowing into Magnificent 7. So if you come over to our MoneyVest website, you'll notice that a $320 billion worth of inflows in the S&P 500, 0.5% higher. Big Three were up $110 billion collectively, and Max 7 was up $186 billion collectively. And of course, a lot of liquidity flooding into the likes of Nvidia, 68 billion, Tesla 43 billion, Apple, Amazon, Meta, everything going up very, very nicely. And the stocks that were selling off, Google 5.3 billion, Merck 3.6 billion, Wells Fargo 3 billion, S&P Global 2.3 billion, Bank of America. We did have a little bit more on the staple and financial stocks that were pulling back here on the day. But nonetheless, this was a very, very strong day for the markets with majority of stocks here pushing higher. Now, before we get any further, make sure that you drop a like and subscribe. And also I want to remind everyone for the Black Friday sale that actually expires tonight at midnight. So if you want to take advantage of any of the educational courses, all individual courses, as well as bundles are going to be 70% off, coupon code Black Friday. If you want to enroll in any of the fundamental analysis, technical analysis, psychology of investing, as well as options trading, links are going to be down below, and the coupon code is going to be Black Friday, expires tonight at midnight. And this is again one of our larger sales. And TradingView is also having their Black Friday sale expire, I think today. This might be the last day for the Black Friday sale. They're also offering 70% plus 1 free month. I've already upgraded. We've had a lot of members upgrade and take advantage of these sales. So again, both links are going to be down below if you want to take advantage of that. This is again Thanksgiving week, one of the biggest sales of the year. So courses, 70% off, coupon code Black Friday across the board for anything you want to enroll on, including the bundles. And of course, TradingView also is available. Now, before we get into the Thanksgiving week and what the performance might look like next week, I really want to go over the options portfolio hitting a brand new all-time high, sitting at just over 112,000. And year to date, the performance is now just shy of 32.5%, with the S&P 500 sitting at well over 27%. So very, very nice performance, of which premiums are just shy of $5,000, with the total gain sitting at just over 27,000 for this year. As you guys know, I started this portfolio with just over 50,000 a couple of years ago, and last year this portfolio was up 26% against the S&P's 24, and this year we're up over 32% against the S&P's 27. Now we're going into the last and final month of 2024. So I'm not going to be taking on too much risk with this portfolio because I just need to close out this entire year with that 5 to 6 percentage points outperformance with a relatively low beta. And that's it, right? It's just about base hits and just about achieving your target. Not swinging for the fences, not swinging for the home runs, just being consistent in our strategy. And so that's going to be the whole idea. And again, if you want to get access to all the trade alerts, all the options alerts, all the weekly updates, everything that we have to offer, including the Discord community, link's going to be down below for that as well. You can choose to play annually, and that's also going to save you 16%, meaning you get 2 free months, and of course get access to everything over here. So you can pretty much read everything that you're going to have access to by joining our community. We've got thousands of traders and investors talking about the market pretty much every single day. That's all we do. Now, coming over to market seasonality, November was the best month for S&P 500. This month, the markets were up over 5.7%, so a little bit shy of 6% in the month of November. And if you take a look at November seasonality since 2000s or 1970s or 1950s, or even going back as far as 1900s, you'll notice that November and December have been 2 of the best months in the market. In fact, the more recent you go, the better November performance tends to be. If you go back as far as 1900, November has a probability of being up 63% of the times. If you go to 1950 onwards, we're at 69%. If you go to 1975 onwards, we're at 73%. And since 2000, November, the month of November has been up 75% of the times with an average gain of 2%. So that again is a significantly high probability for us to be up by also the largest percentage gain on an average basis. This was the highest month that November 2% since 2000. And of course, it lived up to those expectations because we were up over 5.7%. And I've also taken a note of all the previous months and how they've compared against their previous historical seasonalities. The only outlier, of course, is September, which is the biggest outlier. September historically has been one of the worst months for the market. But in 2024, things were different despite having 3 years in a row of being down in the month of September. But this September, we were up a little bit over 2% for the S&P. And of course, August, we had this big swing in the first week of August. We had the market selling off because of the Japan carry trade. Volatility spiked up to 65. I was a heavy buyer back then. I sent out a lot of alerts in Discord. And of course, we had a lot of buyers step in, pushing the markets back up. So the real question now is going to be, what does December look like for the markets? I do still believe that we're going to have a pretty decent close for the rest of the year. However, there may be some volatility along the way, considering that we do also have another FOMC meeting coming up in about 19 days. So we are getting ready for another round of a lot of economic data points, inflation, unemployment, the Federal Reserve. So in 19 days, we're going to learn more about what the policy is going to be moving forward. And it's also going to be accompanied with a summary of economic projections, meaning that we're also going to be getting 3 to 4 years out projections from the Federal Reserve of what they're going to do with 4 things: inflation, interest rates, unemployment, and economic growth. What are their expectations moving forward? But right now, as it stands, the markets are fully pricing in a 66% probability that we're going to get another 25 basis points worth of cuts in the December meeting in the next 19 days. Whether that's going to be optimistic or not, I'll let you decide. But for me personally, I do believe that rates are not coming down to what we have witnessed from back in 2020 or 2021. I think they're going to stabilize in the mid 3s to high 3s, possibly even in the low 4s eventually, because inflation is very, very reluctant in coming down. So if you come over to the PCE numbers, which is the Fed's preferred measure of inflation, the numbers that we got earlier this week, you'll notice that the headline PCE is still sitting at 2.3%, but it's really core PCE when you exclude for food and energy that's sitting at 2.8% on an annual basis, which is still about 80 basis points higher than the Federal Reserve's target. Now, this is still on a decent trend lower, but we did see a little bit of an increase from 2.7 where it was in the last 3 months, July, August, September, but then in October, it ticked up to 2.8%. So whether the Federal Reserve sees that as a little bit of a threat, we'll find out very soon. But me personally, I do believe that inflation is going to take a long time before it actually stabilizes at 2% or below 2%. And part of that is shelter prices. I think rents really need to come down in order for core PCE and core CPI to actually trend lower, because energy has already been doing a great job in that disinflation. In fact, it is now actually in deflation, and it's actually helping headline inflation. But when you strip out food and energy, the main culprits end up being shelter prices, transportation services. We got airline fares that are also part of it, apparels and used cars. All of that is part of core PCE. And of course, that's what's keeping inflation higher, is primarily shelter, because that's really been elevated for the last 2 years. So the moment it starts to drop off, I think that's when the Federal Reserve will feel a lot more confident that they can continue to lower rates because inflation is trending lower. But this right here, in my opinion, is not the best sort of trend that we're seeing, that it was stable at 2.6, 2.7, and it's now starting to tick back up, which obviously is not going to be great news because we know what happened in the 1970s and 80s. As soon as the Federal Reserve started lowering interest rates, inflation absolutely went crazy once again. So now Thanksgiving week here, this week, there was also a 75% probability that we were going to be higher. So you combine November and this week, you combine those two things, and of course you've got a very, very green market with an average and median gain of almost 1 to over 1%. But next week is the big question mark. It's the beginning of December, and are we going to see any type of a pullback? Are we going to see any type of a dip or a little bit of a correction in the market? And it's possible, right? Anything is possible, really. At the end of the day, nobody really knows where the markets are going to go. But our job as investors and traders is to always take a temperature of the market. It's for us to always understand not where we're going, but where we are. That's the main idea. And for us to understand how is the risk reward in the present. And that's why we've built the Money VIX Index to better help us understand the temperature of the market and whether the risk reward is favorable or not. And 33% probability that next week we're going to be higher with an average and median loss of 1% to as much as over 68 basis points respectively. However, from Thanksgiving all the way to the New Year's Eve, there's a 75% probability that we're going to be higher by an average of 1.3 and a median gain of 1.6. So while next week could be a week where we do see a little bit of a profit taking, maybe a dip or a correction, but that would still, in my opinion, could be a buying opportunity because this market has been extremely strong throughout the year. And you can actually kind of see that from the Money VIX Index. So if you come over here and go over to Money VIX Index, we're at 3.99. So we're back into quote unquote almost at greed right now. And you can see the chart as it's crawling up to 3.99, so almost at 4, which you'll notice that as soon as it hits 4, we're going to be in the greed territory. And this right here is a testament to how strong this market has been because we have not seen very serious, good, high quality buying opportunities. Only a couple times in 2024. One was April and one was August. Both times I had a lot of alerts go out because there were buying opportunities, but this year has been very strong. You can see that we rarely dip below 3.5, and the two times that we didn't really drop below 3. So it's been a very, very strong market. So next week, if you do come down on the Money VIX Index, that's going to be a little bit of a dip buying opportunity, in my opinion, in what is a very stronger market. But then again, we're going to be waiting for better and higher quality opportunities. Something like you can see in 2023, we had a lot of buy triggers, a lot of buy signals kind of go off. In 2022, there was a lot of them because we had an entire year worth of bear market. So this is really what we're going to be waiting for. I mean, from a long-term perspective, from a perspective of where the risk reward is really strong, those are the triggers. That's really what we wait for when we're looking to deploy capital in sort of like in a more aggressive fashion. Now, coming back over to the markets, S&P 500 hitting a new all-time high of well over 6,000 points. So there's not really much for us to go over other than the fact that we are just pushing up and to the right and breaking out above this resistance. Support level stays put at 5,800 if and when we actually do see any type of pullbacks or any type of cooling in this entire market. And we got the NASDAQ here also slowly and steadily kind of creeping up, and resistance is going to stay put at 19.3. That's also the all-time high for the NASDAQ as well. And 18.6 is going to be that support level to keep in mind for the NASDAQ. Volatility here continues to draw down, 13.5 right now, so a little bit under 3% lower on the day. And if you come over to our spreadsheet, and if I go over to the VIX summary, you'll notice 13.6, we're now in the 22 percentile. So the moment it drops below 10, so you can kind of see that. So this is all the observations that we have made about the volatility. And the moment it drops below 10, it's only really happened 68 times in the last 8,514 trading days. So it's only spent 68 days below 10. So if you do that percentage-wise, it's been less than 1% of the times. And if I do the math here, I think it's like 24, 25 years worth of trading days here. So 8,514 divided by 252, we're looking at about 33 years. So 33, 34 years worth of data that we have here for volatility. Less than 1% of the times, it's actually spent below 10. What does that tell us? It tells us that it's really important for us to be cautious now. Volatility is, kind of coming down to some really low levels where it could spike any day or any week. And that's what is that going to do to the market? Of course, it's going to make it come down because of the inverse correlation that we have of negative 0.6196. It's not a perfect negative correlation, but it's close enough for us to understand that when the VIX spikes, the markets in most cases have dropped down, giving us better opportunities to buy. Now coming over to market breadth here, you can see that it continues to move higher. There's been a lot of more participation from a lot of individual stocks, and as a result, almost 80% of stocks are now trading above their 20-day moving average. Almost 70% are trading above their 50-day moving average, and 75% are trading above their 200 simple moving average. So all in all, very, very strong momentum for for the broad-based market here, and it continues to of course power this entire rally that we're seeing. Crude oil prices stable, a little bit under $69 per barrel right now, and then coming over to the 10-year treasuries, we are sitting at a little bit under 4.2. So it's starting to roll over. There's been a lot of bets on a short side on TLT, and of course, investors, traders, option traders are expecting for the yields to actually go up from here. They did go up, of course, and we're now starting to see a little bit of a pullback. And if you come over to my broader chart here, we also kind of tagged that lower high on the 10-year treasuries. So this is literally what we had identified in our previous market updates, and the yields are really now starting to come down. However, again, there is a lot of consensus among option traders that the yields are going to start moving back up again, especially after Trump takes over. So again, there's a lot of debate here, but TLT, TMF are now finally starting to move back higher, as a lot of investors and traders have been betting on, of course, the bond market recovering back up. Now, my target for the 10-year treasuries initially, for how low they can come down to, is already achieved. So this right here is what I would consider to be a pretty decent support at 4.1, 4.2%. So we're already starting to come down. And again, the real question is, are we going to see some more downside here, or are they going to stabilize and then start moving back up? So if you come over to TMF, we are already moving up, and my target for TMF initially is going to be closer to around $52.75 to $53. And TLT, as you can see, is already now starting to move back up, and this right here would be considered as a little bit of a resistance at $94 for TLT as well. So that's all I've got for you today. It's a little bit of a shorter update, but I will be giving everyone a market update, Magnificent 7 update over the weekend. We'll be going over the technical analysis and the charts and everything in between. But make sure that you drop a like and subscribe to the channel. Get ready for next week. It's going to be a very, very important one. And also do take advantage of the 70% discount that is available until tonight. So it expires on midnight tonight. Black Friday sale coupon code is going to be Black Friday with the link down below. And as always, happy investing, and I'll see you all in the next video.